Hello everyone and welcome to my morning report analysis videos on Friday the 8th of June with me, which is Paramarket Analyst at Hantec Markets. There has been a move into risk aversion really amongst the markets, and this comes ahead of what we're seeing as the G7 meeting today. The sort of tweets that Donald Trump has been sending about his fellow G7 leaders has not been all that encouraging, certainly given the fact that the trade dispute is ongoing, and it certainly looks as though it's going to be fairly, well, has the potential to be a fairly acrimonious meeting. And markets have gone into risk-off mode on the back of that. The yen is the main outperformer on the forex markets today, but also you've seen the dollar strength pretty much across the board on the majors. Gold is sort of ticking, well, it's ticked slightly high. It's been sort of fluctuating a little bit this morning, a little bit higher, a little bit lower. It's just ticked a couple of bucks higher, but generally speaking, risk appetite is off. And look at those equity markets. The DAX, 1.5% down now, looking under pressure, and the DAX is the main outperformer amongst the European markets. We saw Wall Street falling back into the close last night. The S&P 500 sort of losing a little bit of the upside that it had been sort of seeing, but the Asian markets mainly have also been sort of turning to risk off. As you can see here, the markets are sort of pretty much across the board in Europe anyway are under pressure. So what we have is the dollar, which has just rebounded slightly, as I said, on the trade weighted dollar, and that is a reflection of the sort of risk off sentiment that we have at play today. So in terms of data today, there's not a great deal. You've had the Chinese data out overnight, the trade balance, which actually was fairly positive. Really, we had the, if I can find it, had the data for China, which came out positively on exports and imports, both higher than expected. But you're not really seeing too much reaction to that data, given the concern that the markets have over what could come out of this G7 meeting. Apart from that, you've got Canadian unemployment this afternoon. It's a pretty quiet day, so focus squarely on that G7 meeting. Now, my chart today is the Euro Aussie. Euro Aussie the euro generally has been really strong in the last few days, as these comments from Peter Pratt really did put the sort of normalisation of monetary policy for the ECB back into focus, and the euro has risen on the back of that across the majors, and against the Aussie is one of the key moves, and we're seeing this downtrend now tested on the Euro Aussie. But look at these momentum indicators. This is the real sort of improvement that I wanted to point out, whereby you had this crikey, that's not great, is it? Okay, where you had this slight bull divergence on the RSI, but also the MACD lines crossing higher, the stochastics crossing higher and rising. It certainly looks as though this is a recovery that is in process now. If we can, you had a closing high of around about 2 weeks yesterday, but if the market moves above and closes above 55.30 today, that would be sort of a small base pattern completed, and it's seen 55.40 initially as it's tested that downtrend. So a close above 55.30 today would complete that base pattern, and then sort of certainly open the 156 level as an old pivot. But also you would suggest that you'd measure from 53.15 down from 55.30. It's around about 210 pips of recovery, so you could start to see a real turnaround in this Euro Aussie chart, and that's what, considering you've seen the improvement across the board on the euro pairs, I think that is not unrealistic to suggest that that's going to continue through Euro Aussie as well. So with that in mind, I wish you good luck in your trading, and I will speak to you later.